Hi friends, just 10 days ago I created a video on IREDA stock and more than 4 lakh people watched that video, and more importantly 99.2% people liked that video. Remaining 0.8% did not like the video, so no worries, I will continue to improve my channel every single day and hopefully I get to a stage when 99.9% people like my videos. With that spirit in mind, I am going to do a full analysis of REC Limited in this video, and if you watch this video for 10 to 15 minutes you are going to learn more than what you will learn in some paid courses. Why? Because I will present to you data, facts, and more importantly commentary by REC management team, so you are going to learn a lot. I will give you positives, I will give you negatives, and totally 100% unbiased opinion. So relax, sit back, get some popcorns, let the show begin. So first thing first, at the time of recording this video, the company is trading at around 500 rupees level, right? In the last 1 year, company has given close to 315% return. So a massive rally has been seen in this company in the last 1 year. Why? We will talk about all of that in just few minutes. But more importantly, if I take you straight to their investors presentation, right? So here, Rural Electrification Corporation Limited, REC Limited, is a Maharatna company, right? And I will talk about Maharatna company and many other details. So whatever I speak on this video is going to be fact basis, right? Something that mutual fund investors, portfolio investors are consuming this information and making their decisions. So if you like this sort of analysis, a simple request for you to hit the like button. Let me know in the comments, a simple thank you. With that, let me take you to REC's journey. 2 or 3 critical points that we need to understand here. One is that 1969 the company started, so it's not a very new company, very old company, right? But more importantly, 2022 the company was conferred as Maharatna status. Now why that matters? Let me make it very clear, and so that you understand it once and for all. If I come down and talk about Maharatna status, this is the highest PSU status that Indian government gives to any PSU, right? And if you look at the hierarchy here, Mini Ratna second is the lowest, then comes Mini Ratna first, then Navratna and Maharatna. And only there are 13 PSUs till date that has been conferred as Maharatna. Now when a company is conferred as Maharatna, it has a competitive advantage. Especially if I talk about the NBFC PSUs, what it simply means is that because they are Maharatna company, borrowing is never a problem for these companies, right? Because the market believes in these companies and government has high stake in these companies. Government will never let the company down or go into defaults, right? For this very reason, in 2023, the company became largest green bond issuance of USD $750 million. So whenever the company will need the money so that it can grow its loan book, it can go to market and can get funding easily and at a lower interest rate. So this is a critical point that we need to understand. But just because a company is Maharatna, it doesn't mean we should invest in that company. We need to look at their fundamentals as well. Let me walk you through those now. So when I speak about fundamentals, specifically about NBFC companies, the first thing I tend to look at is their outstanding loan book. What you see on my screen is outstanding loan book of REC Limited, right? The current loan book size is at around 4,97,000 crores, right? If I put this in some context, PFC's loan book is also very similar, 4,50,000 crores. If you look at IREDA's loan book, it is at around 50,000 crores only. And I can say that PFC and RECs are IREDA's BAP basically. But if you look at SBI's loan book, you will see that SBI's loan book is at around 35 lakh crores. So SBI is BAP of PFC and REC from loan book perspective, right? But more importantly, if I show you 2 or 3 critical points about their loan book and the future prospects of this growth, you see distribution companies have taken 43% of the loan book from REC's perspective. Power generation is 29%. Renewable is only 7%. But I'll come to that in a minute in terms of the growth in renewable sector from REC's perspective. IREDA, for example, is a company that is having 100% of their loan book given to renewable sector, right? That's a separate topic altogether. But if you look at the future prospects of the growth, you see in the last 1 year, it has grown by 21%, right? And just to put this in context, SBI, for example, has grown by 14%. So I can say that REC is growing at a very good rate from a loan book perspective. In the next 2 years, if you look at the page 11 of their investor presentation, in the next 2 years, the company is planning to grow by 15 to 16%, right? Now, let's say what happens is the company is not able to grow at 15 to 16% growth. The market has baked this number into their calculation and there might be some profit booking. The share prices may come down. So that's a risk here. But if the company performs better than 15 to 16% of growth, let's say it does 18%, 20%, 22%, then what is going to happen is it is going to beat the estimates and therefore the prices will continue to rise. So this is where the risk and reward comes into picture. But in the short term, it looks to me that the growth is there. But if you talk about the long-term perspective, so look at 2030, for example, right? Companies saying that their loan book is going to exceed close to 10 lakh crores, right? Which is a very good growth. In fact, they're saying that it might hit 10 lakh crores from 28-29 perspective only. But the point is, should we just go with what management is saying? We just need to understand where this growth is going to come, because we are putting our hard money into this company if we are planning to invest in this company, right? So the first point that the company is making here is that they were party to the G20 Energy Working Group. Very, very important point. Nobody is talking about these points here, right? And what they're saying is that they have signed Memorandum of Understanding, MOUs, worth 2,86,000 crores, right? So there is going to be a lot of growth coming from this side. And out of this 2,86,000 crores, they have already sanctioned loans worth 1 lakh crore. So it is not something that is only on paper. I think Indian government is putting lot of stakes into power companies, right? Now comes the second point here, that also they are diversifying into non-power infrastructure and logistics sector here. And they had already sanctioned 85,000 crores in this year, and they plan to raise this to 1 lakh crore next year, right? Again, very, very good growth coming from that perspective as well, because the company is diversifying from power sector and it is going to infrastructure and logistics sector. Now that could be a risk as well. I will talk about it in a minute. But third critical point that we need to understand is that they are saying that Indian government has announced that we are going to have the capacity addition of 80,000 megawatt, right? From a coal perspective. So there is going to be a loan book that is going to build from power generation through coal as well. And there are projects coming up from that. So there is a good chance that the loan book is going to continue to grow in short term as well as long term. So I don't see a major risk here. Let's move to second critical point that we need to understand is how much of loans they have sanctioned in the last 9 months, so that we understand the current direction of the flow, right? For that, if you see latest Q3, they have sanctioned 1,32,000 crores. This is the highest ever quarterly sanctions they have done, right? It is a huge number because their overall loan book is around 5 lakh crores. And out of that, they have sanctioned 1,32,000 crores in this particular quarter. When I say sanctions, I do not mean that they have given these loans. It is only the approved loans. How many of these monies will be actually disbursed? I will talk about that as well. So please make sure you're very clear in these basic terminologies, right? It's very, very important. Otherwise, you will not understand anything when you do the analysis yourself, right? So sanctions is something that they've approved. Now let us come back and see this distribution here. So from a power generation perspective, FY23, this column you need to look at. FY24, this column you need to look at, right? Let us look at the growth. So generation, 27,000 crores to 63,000 crores. So almost double, right, in a year. Very, very good growth here. If you look at the renewable here, 21,000 crores to 1,25,000 crores, right? More than 5 to 6 times of growth is coming. And you can see that in the chart as well, that out of this 1,32,000 crores of sanctions they have done, 57% they have done into renewable sector. It's a critical point you need to understand, that renewable sector is where the major investments are going on, right now, right? From a growth perspective. And REC is leading that, right? Second point you will see here is that from a transmission perspective, 7,000 crores to 19,000 crores, right? So almost triples, right? So there is a growth coming from every aspect. But if you look at distribution here, from 1 lakh crores to 68,000 crores, so it has come down. And in my view, that is not a bad sign at all. I will speak about why the distribution loan book slightly is more stressed when it comes to REC. I'll give you examples as well, show you the data as well, so that you understand it. So overall, the key takeaway here is that the renewable loan book sanctions have grown up, right? This is what we have seen from data. Also, if I look at and read their page 3 of their management commentary, what their management is saying is that by 2030, the total loan book that they will have, 30% of that will come from renewable sector. And as we see in the previous section of this video, around 7% was the only loan book coming from renewable sector. So it is going to be from 7%, it is going to be 30%. And I think it is a very, very good mix of renewable loan book as well as other power sector loan book, and also they are diversifying into infrastructure and logistics. So from a risk perspective, I think their risk is slightly mitigated, although the growth is coming from renewable sector, right? So far, if you're liking this video, hit the like button. Let me know in the comments a simple thank you. That will be much appreciated. Also, if you like exclusive in-depth stock analysis, you can consider subscribing to my YouTube member community. I post a lot of in-depth analysis of stocks, mutual funds, etc. on that community. You will find the link in the description or in the pinned comments. With that, let me now take you to the disbursement, which is how much of loan they have actually distributed, because this is where they are going to make money, right, in the short term. So if you look at this highest ever quarterly disbursements during Q3, 46,000 crores, right? So the number is looking very, very good. But if you look at the breakdown of these numbers, you will see the power generation from 11,000 crores has gone to 20,000 crores. So almost double here. Renewable renewable is only 8,000 crore to it has moved to 9,000 crores. But please remember that in this quarter, they have sanctioned a lot of loans for renewable sector. It is going to take at least 1 to 2 years of time before they can distribute those loans. So the loan book from renewable sector right now will look very, very low. But in the next 2 to 3 years, it is going to ramp up very, very massively, right? Again, from a transmission perspective, it has doubled. From a distribution perspective, it has almost doubled, right? So again, there's a good growth coming from actual loans that they have distributed. And this is where the money is coming in terms of profitability, right? Now, if I look at the next year's projection, what somebody was asking from an investor community was that what is your target for the next year? They're looking at 1,50,000 crores next year. Again, it is going to be very healthy. If you look at the last 9 months, they have done close to 1,22,000 crores of loan distribution. Next year, again, it is not going to be like 2 lakh crores or 3 lakh crores, but it is 1,50,000 crores. Again, please understand this is critical point because market is consuming all of this information and they're putting all of this into their accounting to bake for these results, right? And if the company does better than that, the stock prices go up. And if the company does not perform, you might see short-term volatility. So risk and reward ratio is there. But now let me also say that the company is saying this 1,50,000 crore does not include rooftop solar. So there is going to be additional growth in my view from 1,50,000 crores. I will speak about rooftop solar in few seconds. Just allow me 1 or 2 minutes because I need to also get to the asset quality because it is very easy to distribute loans, right? But can you collect the loans back? What is your bad loans? What is your net NPA? What is your gross NPA? If you look at the history here, in the last few quarters, they have actually been doing pretty well in terms of bringing the gross NPAs down as well as net NPAs down. You can see that data here, right? But more importantly, if I show you that their 40% of their loan book is borrowed by these 10 borrowers and all of them, I think, are state driven, right? So for example, Tamil Nadu Generation and Distribution Corporation Limited has got 10.26% of their loan book, right? So people from Tamil Nadu, hello everybody. Also, if I just move along and look at some of the KPIs that the company is talking about, out of 36 stressed assets, the company has resolved 20 in this quarter. I think it is a big deal, right? So they are bringing these bad loans down. But more importantly, in the last 8 quarters, critical point, in the last 8 quarters, they have not added a single new NPA. It is amazing that they are not adding more to this debt from an operations perspective, which is a very, very good news, right? So going forwards, if you look at this, the company is also talking about that Ministry of New and Renewable Energy has assigned REC as the nodal ministry of implementation. So solar rooftop that has been talked about in the budget as well is going to be seeing a lot of money investment into that. And this company has been assigned as the nodal ministry for implementation of this scheme, right? Now you will see in media that there is a lot of news about, oh, REC share is going to go up like crazy because they have been assigned as the agency to implement the solar rooftop, but the money is not going to come from that. I will speak about that in a few minutes. Actually, let me cover the solar rooftop very quickly in just few seconds, right? So what you see on my screen is that the company is saying that around 15,000 to 20,000 crores of financing is what is going to be added into their loan book from a solar rooftop perspective. This number is very, very low because if you look at the total loan book, it is around 5 lakh crores. So 15,000 is not even 5% of that, right? So in my view, there is not a lot growth coming from this. And also what their management recognizes is that it is quite a complex exercise to install because it is very new. There is going to be a lot of people involved in this. So I don't think it is going to be a lot of revenue generation source from a company's perspective. Therefore, if you read in the news that REC has been designated as a nodal agency and all that, it is a noise. Please don't put your money basis this news, right? What you really need to look at is other parameters. So if I just come back here and show you the key highlights as well, let's talk about that. Total income grew by 19%, right? Net profit grew by 24%. The company has crossed 10,000 crores of net profit, right? This we are talking about the last 9 months, by the way, right? Loan book, we have talked about it. Comprehensive income has gone up. I think overall the KPIs are looking very, very good, right? So I have no problems in reading out these numbers, but you can also read these numbers. Also, key ratios that I always talk about, discuss with you. I've compared IREDA, PFC in my previous video as well. Go and watch that video. From all these numbers perspective, net interest margin percentage 3.61%, very healthy. Cost of funds is 7.28%. I think it's reasonable. Yield on loan assets percentage is 10.13%. I think it's looking very, very good. So all in all, from a fundamental perspective, the numbers are looking really good. I can see that the growth is coming in the short term and long term as well. So there is no problem there. Now, if I talk about some of the risks here, couple of the risks that I want to highlight. One is that the company is diversifying into infrastructure and logistics sector. And in my view, that is a risk to their NPAs, right? Although the company is saying that they're only giving loans to those infrastructure and logistic projects that are funded by state government. So for example, metro projects that are supported by MMRDA, right? But again, I think in my view, they are experts in the power sector, and if they are diversifying into other sector, they really need to build that capabilities. So there is some risk here that we should not deny. We should keep our eyes open on this stock from a infrastructure and logistics perspective as well. Second key risk that I see is that one of the investors is also talking about is that this company is going to come under scale-based regulation from RBI's perspective. And I keep saying to my viewers that regulations can kill businesses, right? So we don't know what changes RBI might do tomorrow. Although right now the management is saying is that we are completely compliant. There is no issue as such. But again, I think regulation is always a risk. It is a hidden risk that can come anytime and bite you, right? So whenever you're investing in stock, that is a hidden risk that you are taking, right? If you are investing in the stock. So please be aware of these risks as well. Now, if I come and talk about the shareholding pattern here, you will see that PFC is holding 52% stake in REC, right? FIIs have actually reduced their stake in the last few quarters. It has come down to 20%, while the DIIs have taken the stakes up into the company. Public also has sort of been dicey here in terms of raising and diluting their stakes. So I think overall, no major concerns here because the promoters are still holding 50% more stakes in the company. If I look at the PE and PB of the company, you will look at, for example, REC here is right now at a PE of 10, PFC at 8.49, industry PE is at 22. So they are well below the industry PE. From a PB perspective, PB is at around 2.18 from industry's perspective, and REC is at 2.03, almost neck to neck there, and PFC is at 1.65, right? So from a valuation perspective, I've given you these numbers. Again, I'm not saying whether it is undervalued or overvalued, right? You got to make the decision. And in my view, if I were to summarize this, I think good loan growth is what we can see. Sanctions has been really high, highest ever in quarter, actually in the last quarter. And the disbursements are also growing at a very good rate. Overall operational KPIs such as net interest margin percentage, spread, etc. is looking very, very good, right? Now, what should we do? Should we invest in this company? Look, this is your money. You have to make the decision. If I tell you that you should invest in this company, then if you lose the money, you are going to blame me, right? You're going to abuse me. If you make some money, then you are going to be thankful. But irrespective of that, why don't you make your decision, right? I'm not giving you any recommendation. Why should I? I've given you a lot of analysis, right? Go and watch some other good YouTubers videos as well. You will learn from them and then make your decision because it is ultimately your money and you got to take the decision. With that little speech, I hope you enjoyed this video. I will see you in my next video. Until then, keep rocking.